Hi everyone and welcome back to my Forex channel. So in today's session I will show you how you can use an EMA strategy in the Forex trading and how you can become very profitable. So if you like to learn my secret, just keep on watching. So as you know, the EMA is perhaps one of the oldest and the most common indicator used by thousands of traders when it comes to the Forex trading. This exponential moving average indicator helps you to understand what goes behind computation, but it can also provide you support and resistance level to execute your trade. So how amazing this tool is. Pretty cool, isn't it? So without waffling me too much, let's start this session. So the first step is to set up your chart properly with the correct moving averages. So in today's strategy, we will use 20 and 50 EMA. It works for all the currency pairs so far, so you can use which one you like to. All you have to do right now is to go on indicators in the trading view or any other platform. It should be no problem to add this indicator and just type in MA. It will be the first one will come up. We just have to double press it because we will need two of them. And in this session, we will definitely need to amend the settings. So instead of 9, we will use 20 and another one will be 50. So once we have our indicators ready to go, let's look more closely to the price action. So in this strategy at the moment, I am looking for a buy signal, and now what we need is to wait for the price to trade above both 20 and 50 EMA, and then we have to wait for that crossover, which will add more strength to the bullish case. So just quick tip for you guys, the base or the general rule for this strategy is that if the price trades above the moving averages, it's an uptrend. Vice versa, if that's below moving averages, we are in a downtrend. So as you can see, I have marked area of a support and resistance. They both had been respected a couple of times. This is the resistance and we have a support. It's been multiple touches over the zone. And even if you will take a look more closely, we had a strong bearish pressure from the seller's side. There was some sort of consolidation before the buyers stepped with the full force, like bull mood, and they went strong with the full momentum towards the upside. So when we had this strong buyer pressure towards the upside, this is when actual crossover happened, if you will take a look more closely. So once the buyers stepped into the market after this consolidation, this is when the EMA crossover happened. So by looking at this moving average crossover, we can definitely generate a buy trade, but we have to do one more thing. To avoid the false breakout, we need to have a multiple evidence than a simple crossover. I do have a replay tool right now, just pretend that we are on live trading, and I will carry on by explaining this strategy. So what we are waiting for and what evidence we require, basically we need to wait for 2 successful retests to confirm that we can definitely enter the long. This is where we can start looking for buy opportunities. The retest should be happening above our 20 and 50 moving averages because we are going to buy. So if you will take a look over here, this is when the retest happened. Basically the buyer stepped into the market, and this is when we have the second retest. So if we see that the price successfully retested the zone between 20 and 50 EMA, and we see the most important third retest, which is over here, we go ahead to the buy because we have enough proof that the buyers are in the market. And even if you're a beginner or advanced trader, you know that there's a push and exhaustion, and as you can see, we had another bullish engulfing candle on the previous area of sensitivity, and now it's shooting again towards the upside. So we do have this strong bullish trend at the moment. So as I said, once we have that third retest on the zone, we can definitely enter a trade. Now in regards to placing stop loss and profit level, we need to place our stop loss just below the 50 EMA, simply because we never know how this market will decide to play, or even if he decides to do the false breakout. So lastly, let's just talk about the exit strategy. Again, it's based on EMA, but it's not the same approach as an entry technique. We will take our profit in different levels just to lock in at least take profit 1 or take profit 2, because bear in mind, exponential moving averages are lagging indicator. It just helps us to still take profits at that time in the market when it's about to reverse. So as you can see, my risk to reward ratio is 2.34. We are entering on the bullish engulfing candle, and let's just take a look how it went. And as you can see, we will be taking 569 pips in total. As I said, we will be taking the profit in the different levels. So as long as you can see, the moving averages just helps us a lot in regards to the trading, just to execute our trade. So this strategy is super simple to understand, even for the beginners in the Forex, or even for the advanced ones, just to, have an addition in their Forex trading. That was it for today's session. I hope you enjoyed it and it was valuable to you. If you do have any questions for me, leave a comment down below or just contact me through my social media. All the information in the description box. So thank you once again for joining me today, and I will talk to you later. Bye!